Okay, dear students, Assalamu alaikum and good day to everyone. Sir Abeel Ahmed is back with the second lecture of your taxation. Okay, obviously the basics are same for ATX. Either you're going for ATX or you're going for tax. I gave this question in the previous video, and let's see how many of you have got the right answer. So let's start. Employment income is 60,000 and you're just supposed to calculate income tax liability. And we know that employment income is a non-saving income. So simply, I'm just taking the employment income, which is 60,000. Let us deduct the personal allowance. Personal allowance, obviously, you are studying Finance Act 2023. It is 12570. Here comes the taxable income. So 60,000 minus the personal allowance 12570. Taxable income is 47,430. Taxable income is 47,430. How to apply the tax? Actually, first you have to use the basic rate band. Once you have consumed the basic rate band, after that you will go for higher rate band. And the basic rate band starts from pound 1, ends at 37,700 pounds in Finance Act 2023. It was same in the previous Finance Act as well. That is Finance Act 2022. But leave that. Obviously, you are studying Finance Act 2023, so let's focus on Finance Act 2023. Income tax. Simply, you can directly take 37,700 into 20%. I think it is 7,540. Now, what do you have to do? Listen, your taxable income is 47,430. You have applied, you have consumed, you have utilized the basic rate band, which ends at 37,700. Now what you have to do? Just deduct 37,700 from the taxable income, which is 47,430. The difference, whatever comes, it actually falls in higher rate band. So 47,430 minus 37,700. I'm getting what I'm getting 9,730. Applicable tax rate is obviously 40%. So I'm getting 3,892. So here comes your income tax liability. Income tax liability. Okay. That is 11,432. Now, another thing. Obviously, in your exam, the limits of bands and the applicable tax rates, they will be given to you. All you need is you should be having a really good grip on applying these bands and the tax rates. How do we actually tax if an individual is having a source of income? Let's say there's XYZ person who is getting income from the non-saving income as well as from the saving income. And let's say then later on I'll come to the inshallah dividend income as well. But right now just focus on one thing. What is the way of calculating income tax liability? The rule is first you have to apply the tax rates on non-saving income. Second, you will go for the saving income. Saving income means simply the interest income. Or you can say the saving income means other than two incomes. One is non-saving, another is dividend income. So to be very precise, saving income means interest income. That's it. So if an individual is having income which is coming from non-saving sources as well as from the saving income is coming. So how do we apply tax and what are the tax rates? And let me tell you, tax rates. Tax rates are here. These tax rates will be given to you in exam as well. So let me quickly explain. Basic rate band non-saving applicable tax rate is 20%, and the same applies on saving income also. That is interest income. 20%. High rate band is 40% for the non-saving, it is 40% for the saving income, interest income as well. Same additional rate, that is 45% and 45%. And how do we actually calculate income tax liability? First, actually, we apply tax rates on non-saving income, then we go for saving income, and finally, we apply tax rate on dividend income. How do we utilize dividend income? What are the rules? Wait for that. Right now, just let us focus on if individual is earning from non-saving as well as saving, how to calculate the tax. Now, for saving income, there are a few additional things also. And these additional points are extremely important. I really want you to focus on each and every point, which I'm going to just tell you right now. Focus. You need to focus. Because if you're not focusing, then there will be a problem, okay? So what are the additional points relating to the saving income? Let me tell you. Number one. Let's say if individual is a basic rate taxpayer. If an individual is a basic rate taxpayer, then that individual gets nil rate band of £1,000. Then nil rate band is £1,000. Obviously, how do we decide who is a basic rate taxpayer? I'll come to that, inshallah. Don't worry. Second point. It's not necessary that individual will have to be a basic rate taxpayer. There's a possibility. What if individual is a higher rate taxpayer? If someone is a higher rate taxpayer, then for the saving income gets nil rate band of £500. If an individual is a higher rate taxpayer, then nil rate band is £500. Now, what if an individual is really rich and that individual is an additional taxpayer? Now listen, if someone is an additional taxpayer, then that individual does not get any nil rate band in saving income. Repeat, if someone is an additional taxpayer, rich man, obviously, then HMRC, the UK tax authority, says, no, you will not be getting any nil rate band. So if an individual is additional taxpayer, additional rate taxpayer, so nil rate band is 0. There's no nil rate band. Then fourth and the last point, what is that? We also have a starting rate band for the saving income. What is that? Let me write and then we'll discuss, inshallah. Starting rate band for saving income. That is from £1 till 5,000. Applicable tax rate is 0%. How do we apply this starting rate band? Again, you have to just wait. Now let's apply these rules through questions, okay? Because you need to learn the rules and the application, obviously. So let's see the third question. Employment income, we know that that's a non-saving income. Let's say employment income is 50,000. Interest income is a saving income, okay? Requirement is same, just you need to calculate income tax liability. How do we calculate income tax liability? I just really want one thing from you. Just pause the video and try to attempt the question. What will happen? Either your answer is going to be correct or it's going to be wrong. Nothing else, okay? But you should try it. So I really want you to pause the video, attempt the question, and then obviously you can always unpause the video after that, and then you can match your answer. So I hope that you have paused the video, and now, after attempting the question, you are watching this. Now we have two sources of income, non-saving as well as saving. So how to calculate income tax liability? Number one, employment income, which is 50,000. We have interest income as well. That is 10,000. If I add both of these, so you will get total income. Let's say the total income, or you can say net income, is 60,000. Simply deduct the personal allowance, 12570. Here comes the taxable income. So let me use the calculator. 60,000 minus 12570. I'm getting 47,430. So the taxable income is 47,430. Okay. Now how to apply the tax rates? Basically, first you have to tax the non-saving income, then you will go for saving income. So let's calculate income tax. For calculating income tax, since you have more than one source of income. So look at this, what I'm doing. Non-saving, saving income, and let's say total. We have non-saving income, which is 60,000. We have saving income, non-saving is 50. We have non-saving income, which is 50,000, saving income, which is 10. Total is 60. Personal allowance is deducted from the non-saving income, which is 12570. Here comes the taxable income. So from 50,000, if I deduct 12570, I'm getting 37,430. And the total income is 47,450. Now, listen, personal allowance is deducted from the non-saving income, okay? If you don't have the non-saving income, or the non-saving income is less than the personal allowance, then remaining personal allowance is deducted from the saving income. Still there is a personal allowance left, it is deducted from the dividend income. How do we use that? Again, I would say just wait. Right now, only one point, that is personal allowance is deducted from the non-saving income. That's it. Just stop here. Don't think anything else. Only one point, one rule. Personal allowance is deducted from the non-saving income. You have to repeat this with me, okay? Personal allowance is deducted from the non-saving income. You have to repeat. Personal allowance is deducted from the non-saving income. Okay. When it comes to applying the tax rates, first we apply the tax rates on non-saving income. Income tax. Basic rate band, non-saving. The basic rate band actually ends at 37,700, and your taxable income from the non-saving income is 37,430, which actually the entire income falls in basic rate band. So 37,430 into 20%. 37,430 into 20%. I'm getting 7,486. Okay, now the story gets interesting. Okay, listen. First, you have to apply tax rate on non-saving income. Okay, non-saving income is taxable income under non-saving is 37,430. The entire income actually falls in basic rate band where applicable tax rate is 20%, and I have applied that. Yes. Now we'll go to saving income. But before applying any tax rate on the saving income, you have to first check the status of individual. Because if individual is a basic rate taxpayer, then that individual gets nil rate band of £1,000. If an individual is a higher rate taxpayer, gets the nil rate band of £500. If someone is an additional rate taxpayer, gets nothing for the nil rate band in the saving income. Now the question is, how do we decide the individual's tax paying status? That is very important. The question is, how do we decide? How do we decide? Individual's tax paying status. How do we decide? You have to listen to me, watch carefully what I'm saying, how I'm explaining, how do we decide individual tax paying status. Look at this, where I'm just circling. The circle. By looking at the total taxable income, you need to decide individual is a basic rate taxpayer, higher, or an additional. Look at this. The column of total, the total taxable income is 47,430. This total taxable income, 47,430, is more than the limit of basic rate band. Since the total taxable income, how do we decide individual's tax paying status? Individual tax paying status is always decided by looking at the figure of total taxable income, not the taxable income of individual source of finance. By looking at the total of the total taxable income, you have to decide individual's tax paying status. The total of the taxable income is coming 47,430, which is more than the limit of the basic rate band. That is why this individual is a higher rate taxpayer. Now, it could be in your mind that's why he's not an additional rate taxpayer, because his taxable income is far less than the even, or in other words, his taxable income is not exceeding high rate band. In order to be an additional rate taxpayer, individual needs to have the income more than 1,25,141 and more. Right now, the taxable income is not exceeding higher rate band, but it is exceeding basic rate band. So this individual is a higher rate taxpayer, and whoever is a higher rate taxpayer gets nil rate band of 500 for the saving income. So nil rate band saving income, I'm just writing 500 into 0% is 0. Okay. Now we have interest income, saving income 10,000. Out of this 10,000, 500 actually. Out of this 10,000, 500 actually falls in basic rate band, and 500 falls in nil rate band, and we have taken that 500 in a nil rate band. Okay. Now how much is left? Out of this 10,000, 500 actually came in, 500 has come in nil rate band. So the remaining saving income is 9,500. Now we need to decide what should be the applicable tax rate for the remaining saving income. Repeat, the saving income is 10,000. Out of that 10, 500 we have taken in nil rate band. So the remaining income is 9,500. What should be the applicable tax rate for the remaining 9,500? How do we decide? If there is a space left in the basic rate band, then applicable tax rate will be 20%. Otherwise, applicable tax rate will be 40%. Now listen. The basic rate band limit is 37,700, and this limit, first, this limit has been utilized, consumed by the non-saving income, which is 37,430. Then we have also used nil rate band. So I strongly believe nothing is left in the basic rate band. We have already utilized the basic rate band. So basic rate band is fully utilized because if you just deduct 37,430 from 37,700, you'll be getting 270. Then the nil rate band of 500. So simply nothing is, there's no need to go for negative and something like that. So simply your basic rate band is consumed. Since the basic rate band is consumed, so the entire remaining 9,500 saving income actually falls in high rate band where applicable tax rate is 40%. High rate band saving income 9,500 and applicable tax rate is 40%. So 9,500 into 40%, I'm getting 3,800. Just add them, you will get income tax liability. So 7,486 plus 3,800, I'm getting 11,286. So your income tax liability is 11,286. Now let's see one more question. Don't worry at all. Calculation of income tax liability is extremely easy. All you need is just focus. Okay. Employment income. Let's say the employment income is 20,000. Saving income is 15,000. And you just need to calculate income tax liability. Now, seriously, I really want you to pause the video, attempt the question, and then unpause the video. Wow. Pause, attempt, unpause. Pause, attempt, unpause. Pause, attempt, unpause. Let's quickly solve it. Employment income is 20,000. Saving income is 15. So let's say I'm getting a net income 35,000. Personal allowance 12570, Finance Act 2023. Let me use my lovely calculator. I love my calculator. 12570. Taxable income is 22,430. Non-saving. Saving income. And the total. Employment income is a non-saving income. Saving income is obviously saving. Personal allowance is deducted from the non-saving. While calculating income tax liability, personal allowance is deducted from the non-saving income. 12570. Here comes the taxable income. So 20,000 minus 12570. I'm getting 7,430. 15,000. 22,430. Now let's apply the tax rate. The rule of applying tax rate is very simple. First, you have to apply the tax rate on non-saving income. First, you have to apply tax rates on non-saving income. Why? There's a rule. You have to follow the rule, okay? We are not here to make the rules. We are here to follow the rules. income tax. Basic rate band, obviously, entire 7430 obviously falls in basic rate band. Applicable tax rate is 20%. 7,430. If I take 20% of this, I'm getting 1,486. Now, there's no more taxable income from the non-saving income. So we have to move towards saving income. Before applying any tax rate on the saving income, you need to find out. You need to determine, you need to decide. Individuals, tax paying status. If individual is a basic rate taxpayer, then that individual gets nil rate band of 1,000. If an individual is a higher rate taxpayer, gets nil rate band of 500. If an individual so far whom we have not seen, if someone is an additional rate taxpayer, gets nil rate band in the saving income, no nil rate band, zero nil rate band. How do we decide individual's tax paying status? Please follow me, watch me, and look where I'm going to make a circle. Look at this. Taxable income in the column of total. Taxable income in the column of total is 22,430. Since the taxable income, the total taxable income is 22,430, it is not exceeding basic rate band. Taxable income is 22,430, which is not exceeding basic rate band. So this individual is a. Yes, say it. Yes, this individual is a basic rate taxpayer, and whoever is a basic rate taxpayer gets nil rate band of 1,000 for his or her saving income. Nil rate band saving income is 1,000. Now listen, the total saving income is 15,000. Out of 15, 1,000 actually we have already taken in nil rate band. The remaining is 14,000. Obviously, entire remaining 14 comes in basic rate band because you have too much space in basic rate band, which is not fully utilized. And it cannot be fully utilized in this question because in this question, the total taxable income itself is just 22,430. So simply basic rate band saving income 14,000 into 20%. I'm getting 2,800. So here comes your income tax liability. 1,486. 4,286. So your income tax liability is 4,286. Let's deal with one more question. Let's say trading income. We know that trading income is also non-saving income. Trading income is 80,000. Interest income is 15,000. The requirement is income tax liability. Now I really request, pause the video, attempt the question and then unpause. Let's solve it. Trading income. $80,000. Interest income, which is a saving income, is 15,000. Here comes the net income, which is 95. Personal allowance is 12570. So 95,000 minus 12570. The taxable income is 82,430. Taxable income is 82,430. By looking at 82,430, you can easily decide this individual is a higher rate taxpayer, and whoever is a higher rate taxpayer gets nil rate band of 500 for the saving income. By looking at 82,430, which is actually exceeding the basic rate band, so this individual is simply a higher rate taxpayer, because the total taxable income is exceeding basic rate band, but it is not exceeding higher rate band. And whoever is a higher rate taxpayer gets nil rate band £500 for its saving income. Now let's calculate income tax. Make columns non-saving income, saving income, total. Trading income actually is a non-saving income, which is 80,000. Here comes 95. Obviously, when you are calculating income tax liability, you have to deduct personal allowance first from the non-saving income. If you don't have non-saving income, then go for the saving income. And if it's still the personal allowance is left, then go for the dividend income. Personal allowance is 12570. Use a calculator. 80,000 minus 12570. The taxable income is 67,430. And let's add the 15. I'm getting 82,430. Obviously, first you have to apply the tax rates on non-saving income. Basic rate band non-saving. You can see that taxable income in the non-saving income is far more than the basic rate band. So the entire basic rate band we have to use. Applicable tax rate is 20%. It is 7540. Now listen. And listen carefully. Your taxable income under the column of non-saving is more than the basic rate band. You have utilized the basic rate band. And once the basic rate band is utilized by one source of income, it is used for others as well. Repeat. If once the basic rate band is used by, let's say, non-saving income, then this basic rate band will not be available to any other sources of income. Okay, right now, we have utilized a basic rate band of 37,700, but the taxable income in the non-saving column is 67,430. So what you have to do? From this 67,430, just deduct 37,700. Whatever comes, that amount actually falls in higher rate band. Why? Because basic rate band you have already utilized. Higher rate band, non-saving income. Taxable income in the column of non-saving is 67,430. From 67,430, you have to deduct 37,700. So the remaining amount is 29,730. Applicable tax rate is 40% because basic rate band is already utilized. I'm getting 11,892. 11,890. Wow. We have taxed the entire taxable income from the non-saving. Now we have to move towards saving income. Total saving income is 15,000. Before applying any tax rate on saving income, we need to check individual's tax paying status. Obviously, by looking at 82,430, we can easily decide this individual is a higher rate taxpayer. And whoever is a higher rate taxpayer gets nil rate band of 500 for the saving income. Nil rate band, saving income, 500 into 0% is 0. Basic rate band is fully utilized, and obviously the total of both the income is not exceeding higher rate band. So simply Out of this 15,500 we have taken in nil band. So remaining 14,500 of the saving income actually falls in higher rate band, where applicable tax rate is 40%. Higher rate band, saving income, 14,500 into 40%. 14,500 into 40%. I'm getting 5,800. Just add all of them, you will get income tax liability. So 7,540 plus 11,892 plus 5,800. I'm getting the income tax liability of 25,232. So the income tax liability is 25,232. Okay, let me just introduce one more concept. I'm just assuming, let's say, employment income is 75,000. Okay. An examiner says there's pay also. Pay as you earn. Assuming this is 6,000. Simply you can understand, take it like that. Pay means the tax which you have already paid in advance. Pay as you earn means simply take it like that. This is the tax which you have already paid in advance. Okay. The requirement is calculate two things. Income tax liability. And the second is tax payable, income tax payable. How do we calculate? It's very simple. And what is going to be the exact difference between income tax liability and payable? You will get to know very soon, inshallah. Just wait. Since we have only one source of income, which is employment income, that is non-saving income. Simply write employment income. $75,000. Let us deduct the personal allowance 12570. Here comes the taxable income. And let me tell you one thing. There is no such thing nil-rate band for the non-saving income. Nil-rate band, they actually they only come in saving income and dividend income. What is the nil-rate band and dividend income? We'll discuss that. Don't worry at all. Dividend income is having a nil-rate band of 1,000, but how do we use that 1,000? You just need to wait, please. Right now, just focus on what we are discussing. We have discussed if there's a non-saving income, saving income, how do we apply tax? Now, a little bit new thing is here, pay. So let's simply focus on this question. Employment income is 75 less the personal allowance. So 75,000 minus 12570, the taxable income is 62,430. Now let's calculate income tax. Obviously, the basic rate band is 37,700 and the applicable tax rate is 20%, 7,540. Now listen. Your taxable income, entire from the non-saving income, there's no other income in this question, is 62,430. And there's no nil rate band for the non-saving income. Okay. Your total taxable income is 62,430. And out of that, 37,700 you have tax in basic rate band. So you have utilized the basic rate band. What do you have to do? Simply from 62,430, let us deduct 37,700. Whatever comes, that falls actually in high rate band where applicable tax rate is 40%. It is 24,730. Applicable tax rate is 40%. How did I get this 24,730? I've deducted 37,700 from 62,430. So 24,730, applicable tax rate is 40%. I'm getting 9,892. Here comes your income tax liability. Income tax liability. This is 17,432. Your income tax liability is 17,432. But a very interesting thing is this individual has already paid the tax in advance, which is 6,000. Pay as you earn. Since 6,000 has already been paid, so simply deduct pay. If you have in the question, only then you will be deducting. Pay as you earn, which is 6,000. Now you will get income tax payable. So 17,430 minus 6,000. You're getting 11,432. Your income tax payable is 11,432. Now you might be thinking, so what if the pay was make it 20,000? Simply if your pay is more than income tax liability, then instead of income tax payable, you will get income tax refundable, which is the concept is very simple. If the tax which you have paid in advance, it is actually more than your income tax liability, then the difference is going to be income tax refundable. If in the same question pay would have been 20,000, then obviously 17,432 is your income tax liability. What if you have paid 20,000 in advance? So difference would have been income tax refundable. So simply, let me tell you one thing. If income tax liability is more than pay, if your income tax liability is more than pay as you earn, then the result is income tax payable. Or you can put it like that. If your income tax liability is more than pay, let's say your pay is lower and income tax liability is higher, the difference is going to be income tax payable. What if pay is more than income tax liability? Let me show you. If your income tax liability is lower and pay, the tax which you have paid in advance is more, then you will get income tax refundable. Income tax refundable because you have paid more tax than your income tax liability. So if there's a pay in the question, either you will be having income tax liability or you will be having income tax refundable. Okay. Now what I'm doing, I'm just giving you one small question. I really want every one of you try to attempt this question, share your answer on our YouTube channels, and then you can find either your answer is correct or wrong. And in the next video, inshallah, we will be discussing how do we use starting rate band of the saving income. We will be discussing, inshallah, if there's a dividend income, how do we apply tax rate on the dividend income as well. So in the coming class, we'll be discussing starting rate band concept of saving income. We'll be discussing, inshallah, dividend income as well. But before that, let me give you an homework, you can say, or just a question. Employment income. I think the rain has started, which is a good sign. Employment income is 40. Interest income is 25. And the requirement is income tax liability. Just I really want you to calculate income tax liability. So I really want you to try this question. In the next class, inshallah, we'll be doing this question and we'll be discussing the concept of starting rate band as well as dividend income. So thank you very much watching this lecture. And I always say one thing to all of my students, either they are my enrolled students or watching my lecture on the YouTube. I always say from the bottom of my heart, one thing. What is that? I just want you to have a really, really nice life. I don't want to say have a nice day. Why? Because day is very small. In fact, I always say the life is itself very small. So that is why I want my students and those that are listening to me have a nice life. Thank you very much.